Thank you for joining us today to listen to the Cerrado gold story. A little bit of a different story than the Lumina gold-based story. Basically, what we've decided to do, as opposed to going out and drilling extensively, what we did is we decided to get to a point where we felt that we had a strong economic opportunity, and then look to go and build that project, bring it into production with a de minimis cost, and likewise look at growing from there. I'll note that both our assets in Brazil and also in Argentina are discovery assets, and so they're very, very under-drilled and need a lot more drilling to come, where we see substantial upside as we move forward. And I'll display that to you in a moment. We have two discovery assets. We believe that they have the ability to be best of breed. As Tim mentioned, we published a feasibility study. The economics were very, very strong. At our project in Brazil, we have a 9-year mine life, $186 million capex, $369 million NPV for an IRR of about 32% after tax. And the important thing here is that this project, for a period of 9 years, will generate about $85 million a year at $1,750 gold. At a value of $1,900, we're producing over $100 million of cash flow. So that's a nice point here that we'd make is that this is a low-cost entry point. It's a story that we believe we're going to grow dramatically. In fact, this project was brought to us by the two geologists who were the discoverers of the Volta Grande project, which is the largest undeveloped project in Brazil. Unfortunately, not in as good a jurisdiction as we're in, but at the same point, a very, very interesting project. So they believe this project, as we do, has substantially more ounces to come, and we hope to display that shortly. We also have a project in Argentina. We bought that in 2021. We've taken production from basically 20,000 ounces now up to 54,000 ounces last year, looking for a little bit more this year. But what we've also done is we've been able to bring our cost down fairly dramatically from about $1,400 when we bought it down to about $1,100. And we're one of the cheapest, lowest cost producers in Argentina, even though our volumes are far smaller than anybody else. We've got a good production profile moving forward. We like everybody, the mining sector has been significantly hit, and the reality is that we feel that the greatest value opportunity is now, if not ever. And the reality is that we're looking to grow this opportunity. So as I mentioned, Monte de Carmo in Brazil, basically this project is located in Tocantins state in Brazil. It's a very rich state, industrially significant as a consequence of its agriculture, the heavy agribusiness that it has. So basically, we've come into a jurisdiction that's flat, that basically has a few hills, which reminds us of our experience at Jacobina in Brazil and in Bahia. And what we're looking at is basically a project that we think will be has been readily accepted by the community and will continue to be very strongly supported by the government. But as I mentioned in the feasibility study, we have basically just over 1 million ounces in our measured and indicated category, about 850,000 ounces in the proven and probable, average grade of just over 1.6 grams. So it's a good project as an open pit deposit, all-in costs again around $717. So very, very cheap as it goes in the global community. There aren't many projects out in the world today where you can, around that 100,000 ounce production rate, where you can derive these types of cash flows and these types of returns. I'm not going to go as far to say this is best of breed, but it is certainly a very high quality, robust project that we're looking to grow as we move forward. Argentina, this is again, I call this a startup. It's a project that we haven't fully reformed and brought it to its adulthood. What we've done is we've acquired this project just as COVID struck in 2021, and we've grown the production fairly dramatically. And likewise, we think that, like all projects in the Deserto Massif, it has lots of scope for growth. We're neighboring Yamana's or now Pan American's Cerro Moro, Anglo's Cerro Vanguardia project. We're not too far away from Cerro Negro by Newmont. So it is elephant country, and we believe we have a long way to go in terms of our development. Here's our production profile that we've seen since 2021. Basically, we ended 21 after the acquisition at 42, although the acquisition was done at 20,000 ounces, 22,000 ounces. And we're looking for our profile to grow with our the bringing on of Monte to Carmo in 2025. What's unique about this story as well is that we have a strong source of project funding. We announced in July that we had the UK Export Credit Agency prepared to provide up to 70% of our project finance costs that are required, where we need 30% equity. The 30% equity, they've also included, they're prepared to consider a stream. Now, as many of you will know, we have a stream with Sprott streaming and royalty currently, and they're very interested in looking at expanding that if required. And you know, as Scott mentioned earlier, the equity markets have become very expensive, and streams have become a much better alternative in terms of our viewpoint at this point. But the reality here is that for limited capital, we can bring this project in Brazil, you know, to production without too much significant dilution. Management have done a good job in terms of maintaining dilution to a de minimis level. At this stage of development, we have under 100 million shares outstanding. So we're in pretty good shape on that front. And if you look across all the metrics, whether it's and price to net asset values, whether it's the consensus of NAV breakdowns, you know, we look pretty cheap on most metrics that one would see. As I mentioned to you, we've maintained our share structure pretty well, basically at 98 million shares to date. You know, management and directors own 25% of the company. We feel our interests are very much aligned with shareholders. We have a team who have built 3 projects before, turned around a few other projects, and done significant work. So the reality is that we have strong capability, and we've made a lot of money for shareholders in the past, and we believe that this opportunity is probably amongst the best opportunity that we've had to deal with. I'll just run through briefly again. You know, if I look at Tocantins, you know, we're basically 45 minutes from an international airport. We go by paved road all the way to our mine site, and then we have a kilometer of gravel road to go to the mine site. We're 3 kilometers from a town of 7,000 people. Very supportive. We have all infrastructure that we need. There's a 69 kV power line running through the property. We have water. Everything we need is there. There's a labor force of 60,000 people, 45 minutes away, called Puerto Nacional. To the north, we're 45 minutes away from Palmas with about 300,000 people. So all the ingredients here, it's a flat-lying land. It's an open pit deposit. You know, basically what we're looking at is you know, very, very superior infrastructure in Brazil. Again, here's the feasibility study. Why are these numbers as strong as they are? I think it's just a coalition of a bunch of different factors. Grade is good. It's an open pit deposit. Brazil is a great place to work. It's a cheap place with the real trading at 5 to 1 right now. So that makes it some competitive advantages on that. But also we have very good processing grades with the material. It's a high quality. There's no deleterious elements. And again, we have the infrastructure. So all these cumulatively provide what we believe are very, very strong numbers. And again, over the 9-year period, generating, you know, $85 million a year at $1,750 gold, $100 million at you know, less than current prices. Here's our resource that we have. I went through that briefly earlier. The schedule that we have is to now bring it into the development stage, move it to construction. We're working with a group called SD Capital and GKB Ventures out of the UK who are helping us with the UK Export Credit Agency called UKEF. And the reality is that we hope to have this project, you know, with the project funding sometime completed in the second quarter. Looking at our development schedule, again, we've applied for our installation license, which is a construction license. We expect to have that by year end. And so from there on, it'll be ready to go subject to funding. And then production will begin in mid-2025. It's a large project, 82,000 hectares. We've only focused on basically less than 1,000 hectares for our mining operations. Lots and lots of opportunities to go and grow the operation. If I look at the drilling density that we have on the property, you know, Cerrado is where we have the 1.1 million ounces of measured indicated resource. If I look at the drilling that's been done there, you know, 60,000 meters of exploration drilling, where on all the other areas of our property, we have less than 6,000 meters. I'll just highlight here, we see probably in excess of about 30 or 40 high-grade targets that we believe have substantial potential for increasing our resources. There's a lot to do, there's a lot to move on, but we certainly don't feel that we're anywhere near the latter stages of this project. With regard to Argentina, the Desert of Massif is a very similar host of epithermal, low sulfidization epithermal system that you get in Nevada, but it has been less drilled by a long shot, and you only have 4 or 5 majors there at the moment. Looking at the discovery of resources, they've gained about 30 million tons in the last 20 years, 30 million ounces, excuse me, in the last 20 years. And we consider ourselves to be the new kids on the block. If you look at how Cerro Vanguardia developed their 8 million ounces, how Newmont developed it at Cerro Negro, their 7 million ounces. They've gone through different strategies, and we're just trying to figure out what is the best strategy of whether to go underground, open pit, heap leach. As many of you have seen, we've just started a heap leach operation in the summer. That's coming on stream. We had a pretty awful winter. Winter is July, August, September. In August and September, we basically had flooding that soon froze, and so really impeded our ability to bring the heap leach operation online as quickly as we would have liked. But again, if you look at our operating history, we've seen some really good growth in production here, while also looking at reducing our costs. And I'll make no bones about it. Argentina is a complex place to work, but they do have very, very strong resources. Obviously a lot of people watching now to see how the election goes on the 19th of November. I think that could be potentially a catalyst for new investment into Argentina if they're able to bring in policies that will restrict the maintenance of cash in Argentina. Again, we have lots of different ways that we're growing. The heap leach, this is the heap leach operation that we have to the north. This has the potential to produce about 30,000 ounces a year. High grade, cost of about $900 all in is our target there. We're also looking to go underground potentially. We've applied to go underground. Most mines, as our neighbors, they start in this belt as open pit deposits, and then they move underground. And so I think that this is our natural next step. We've applied for our underground license. We're hoping that we'll get that, if not later this year, then in the first quarter of next year. And this is where we see lots of potential growth as we move forward. Likewise, we have a very big surface area, 333,000 hectares. It's the size of Rhode Island. I mean, it's a big land position, and we see lots of different areas that we can grow this asset. Basically, what we've seen is during COVID, we were cash starved, and we have not been able to go and drill as expansively as we would have liked. But we think that this has lots of scope and scale for growth. In summary, this is the Cerrado story. We're a new story. We went public in 2021. We started all our operations in 2018, so we're young and largely unknown. But at the same point, we think we've come a long way in 4.5 years, and we see tremendous growth potential moving forward. So, why look at Cerrado? Value. There's extreme value here with a market cap of $50 million US and an NPV of just shy of $400 million on our feasibility in Brazil, producing 50,000 to 60,000 ounces in Argentina. We generated $22 million of cash flow last year. It's a good developing story, and we hope to see lots of potential for resource growth as we move forward.